Welcome to the Silent Trading channel on Monday the 11th of May. Today we're going through the gold chart to check and see if right now after this dump is it going to finally form a bullish price action, and is it going to finally really form a complete bullish price action or not. We're going to be analyzing next, right? But before we start, please subscribe, like, comment and share if you like this video and to support me in my trading journal. So as we can see right now on the 4 hours chart that a bullish price action has been formed, right? And the chart has finally pushed up to start accumulating sell side volume. And accumulating sell side volume means what? Means it is trying to go up further and further, right? Attacking resistance means accumulating sell side volume. And accumulating sell side volume means the chart must go further to take sellers into liquidation, to force sellers into closing their position before it can come back down. So right now, if this bullish price action is going to be complete, we'll take it as a valid bullish price action and we will buy at the next candle retracement or the next candle retest, right? And as you can see also that it has pushed down, right? Dropped down all the way to this border of the triangle here before forming a bullish price action and filling this gap, right? But there is still one gap that is not filled yet. As you can see, this gap over here, right? From this week, right? From this week to this over here, this is a gap, or what you guys call a fair value gap or an imbalance, right? I will call this an imbalance gap. So this gap may be filled or maybe not, right? Or maybe the chart and the market is leaving it to be filled in the near future. It can push up all the way up first to form what? To form a bullish trend, right? And push up all the way a few 10,000 of points before it start forming a bearish price action and a bearish trend, and then start coming back down to form this gap over here, right? Some gaps are meant to be filled later. Some gaps are meant to be filled as soon as possible. So if this gap is already filled and the chart start pushing up, forming a bullish price action and then start attacking resistance and breaking resistance, we will be looking to see a full bullish trend, right? But please remember that a full bullish trend doesn't mean the chart is never going to come back down. As you can see, there is a gap that is waiting to be filled, which means in the near future the chart is going to form a bearish price action and then start going on a bearish trend downwards, and then we'll come back to fill this gap over here, right? It may be in the near future, it may be in the far future, we do not know. We do not know when the chart is coming back to clear. But can it come back to clear at this 4 hour candle right here? Of course it could, right? It could pull back all the way down and then start breaking support, start attacking support, start pushing down, and then come to fill all the way to this gap over here before forming a bullish price action. We can never be certain what the chart is going to do, but we must never be oblivious to what it is telling us, right? We will be always checking the details that the chart is giving us because it is always teaching us something, right? It is moving in a fashion that we have never seen before, and then it starts going on a bullish trend or a bearish trend. That is a price action that is to be compared, that is to be memorized, right? So as I have said before, the chart has a chance of dumping before forming a bullish price action, and it has already done, as I said, because I see a movement of the chart going on a sideways down more than a movement of the chart going up. That's why I can tell you guys beforehand that the chart has a chance of pushing down further, right? Either going onto a sideways down before dumping, or it can just directly dump at the first candle open today. Alright? So what we need to do is right now we wait for this price action to be confirmed before we buy at the next candle retest, right? The next candle bottom wick forming, and then we'll start buying, right? If not, we're gonna be waiting and waiting and waiting, right? Because the best possible position can only be acquired by being patient, can only be acquired by waiting for the best possible price, that after you buy, you would not go into drawdown, or at least you would be at the least risk possible of going to drawdown. You would not need to be able to manage your portfolio, because the best possible spot would be the spot that after buying you're going to be profiting, after selling you're going to be profiting at that instant, right? So right now what we're going to do is we wait for this confirmation to be sure, right? We wait for this PA to be confirmed before we start buying. At the next candle, bottom wick retest, right? So it happens as I have said, but we do not know if this bullish price action is going to be complete or not. If it is not to be complete, it is going to pull back and then start attacking support once more. But if it is to be complete, it is going to complete by breaking resistance and then retest at the next candle before pulling back and then start expanding, right? So everything in the chart is telling you something. It is on you to believe it or not. It is on you to take the effort to analyze it or not, right? If you're really into reading the chart, if you're really into analyzing the chart instead of just copying any strategy, any theory you can find on the internet, you're gonna be learning, and you're gonna be really learning how to profit, not just learning the way other people trade and then trade according to how they're doing. Nope. You're gonna be understanding the chart. You're gonna be reading the chart like it's your own book, right? You're not gonna be reading the chart like it's a book. You're gonna be reading the chart like it's your own book. Because why? Because if you understand the chart really, if you really understand the chart is going to be like a book that you personally wrote it, correct? So do learn, not just come here to copy, not just come here to be sucking blood and leeching. You're going to be learning, because what I'm giving you is information. What I'm giving you is detailed analysis, which you can use to implement on whatever strategy you're using right now, or you can use it as a whole new theory that you're going to be learning and then going to be using as a main strategy to trading, right? Oh my god, the chart is in so much delay right now. It seems like my internet is slow. Yeah, so wait a moment. So there is in actual truth, the chart is not always going according to pattern. You know why? Because sometimes, even though it seems like it is going according to pattern that have been shared on the internet, but you need to know that those patterns are issued by the big money. Those patterns are issued by the 1% trader, the 5% trader. So most of the time those patterns are going against you, or even if it is going according to the pattern, it is going to take out your stop loss first. It is going to force you into liquidation first, or it is going to force you into closing your position before you can go on its initial trend, right? So you do know that when you play according to pattern, no matter how much your win rate is, you are going to find out that you will never profit. You're never being profitable consistently. Because why? Because the pattern is being used against you, right? They show you the pattern for you to trade, and after you trade according to the pattern, you always got your stop loss with before the chart going on to its initial trend. So you do know that most of the time, most of the traders, most of the retail traders are trading according to a singular or a similar pattern. You guys are doing the same. You guys are having your money swept up by the market, right? So if you do know that your money is going to be swept up by the market, you're not going to be trading the same way. At least wait for the spot where most of the traders are placing their stop loss, and then buy at that stop loss, right? And for example, if you're trading at one spot and you're placing your stop loss below your trade, no, change that buy limit or buy volume or buy position to that stop loss over there, and then see how many times it goes to your stop loss before reversing, right? So put yourself in less risk, not just giving yourself more and more risk but profiting nothing, right? Because we are looking for low risk high return, not high risk high return, and definitely not high risk low return, right? But what you guys are doing are high risk low return. Because why? You're playing according to the game. you're playing according to what they're telling you, right? So when you're playing according to their game, you'll be playing in their hands, right? You'll be playing in their chessboard. You are a pawn. You are not a game master. You're not a player. You're a pawn for them to move you however they see, right? So right now, try and change your perspective in trading. Try and change however you're trading, because if you're trading the obvious way, you will never be winning, right? The obvious way is the way that everyone anticipate, right? That you're going to be trading, but the problem is, the funny thing is, some of you guys know that everyone is doing the same thing, and you guys are also doing the same thing, because you believe that once everyone is doing the same thing, they're going to be profiting. Nope, you're not going to be profiting. If you guys are doing the same thing and you're profiting, who is the one paying the money, right? So when you know that everyone is doing the same thing and they're looking to be losing, they're going to have their stop loss sweep. Don't do the same thing as them. Place your buy position at their stop loss, right? Or wait to buy after price action has been confirmed on the middle time frame as H4, or the 4-hour time frame, or the 1-hour time frame at least. Don't be playing on a too low of a time frame, because lower time frame means higher risk, means more noise, right? Lower time frame is used to be for detailed analysis. Middle time frame is used to enter a position, and the higher time frame is used to determine a bias or determine a trend. Okay, so that is all I'm here for today, and I look forward to seeing you guys tomorrow, and I hope you guys will get a suitable position for today, because if a bullish price action is being formed and it can be complete, I hope you'll be able to get a position from this complete bullish price action and then be able to profit. Okay, so for today, I'll see you guys tomorrow, and I really look forward to seeing you guys every single day. And for today, that's all I'm here for. See ya.